There we go. Hey everyone, hope you're all doing well. Hope you're all having brilliant, fantastic, amazing days as always. Today I'm going to be answering and recording a video for you to answer another commonly asked question from inside the Discord community, which is trading indices or trading Forex. What is it you should choose? I've got my notepad up here on the right-hand side. I've written out all of the notes that I've thought and brainstormed about, from my personal experience over the last couple, years. And hopefully I can give you some, knowledge, advice, and a few things to, to think about and consider, whether you're new to the market, whether you're experienced to the market, about what you should be trading. And should you be trading indices or should you be trading Forex? So to begin, let's assume you're new to the market. Okay. The conclusion that I basically came to is that 99% of the time, it is best to be starting with FX. Okay. Reasons being, okay, is that it's got a slower market movement. Okay, if you had a chart of FX pairs and you had your indices up on the left-hand side, your FX pairs up on the right, you would see an increased amount of volatility and movement on the indices side rather than the FX side. FX pairs move a lot slower, okay, whereas indices are moving with speed. And when you're beginning to trade, this can be daunting. This isn't typically something that you want to be trading. If it's going to be fast, you want to be trading something that's a bit slower, a bit more manageable. You don't have to sit there watching your balance go up and down very, very quickly and aggressively. Okay, now the second thing will be that for indices, you tend to need a larger account size. Okay, now typically, again, this is not true for everyone, but for most people, if you're going to begin trading, you start off with quite a small account size. Most people are going to start their journey with, under £1,000, $1,000, round about that sort of ballpark figure. Most people aren't starting with $10,000 plus. Okay, now for indices, as a standard rule of thumb, you kind of need $10,000 plus to be trading to get the, position sizing in that you need on most of the brokerages is, $10,000 plus. Okay, so that'd be the second reason. Now, the third reason linking onto that is that price action and market structure on FX pairs tends to be a lot cleaner, a lot smoother, and hence a lot easier to trade. When you're, looking on the 1 minute or the 5 minute time frame on indices, for instance, you will see a lot of wicks, and it's not very, very clean. Often it's not very clean, making it difficult to trade if you're new to it. And linking onto that for the fourth kind of reason is that FX pairs tend to respect trends and channels a little bit better, which are more basic concepts to understand within trading. To trade indices and to have an edge trading indices, you need to be able to understand order blocks, imbalances, and more smart money concepts, which are harder to grasp, they're harder to see, and take more time to learn. Whereas trends, price action, whether you've got engulfing candles, pin bars, whether you've got, bullish market channels, bearish descending market channels, higher highs, higher lows, lower highs, lower lows, are very, very good and easy to see on FX pairs compared to indices from my own personal experience. That's why I'd say that it's it's kind of easier to read. It will give you more confidence. It will help build up your your foundation for trading and your experience a lot better than if you went into indices and had no clue and lost a load of money and lost all your confidence. It's much better to start off with a slower moving pair, something that's going to be a little bit easier to read and do analysis on. Joining on from that is that indices are really, really good to try and learn once you've built up that foundation from FX pairs. Once you've understood FX pairs, you've understood the foundations of trading, have a look at indices, try and, broaden your skill set, learn things like order blocks, learn things like, imbalances once you've got that foundation. So from my experience, it would be, I'd aim to learn and master FX first. Okay. And then what I've said is that I then, look to transition to learning indices and then kind of decide which you prefer. But I would say to start off with FX is probably the smartest route, because the volatility is going to suit more traders. And I would say it's easier and faster to master and learn. And I'm going to be doing another video, in the next coming videos, which is going to be, why I only really trade one Forex pair at a time. And I'll touch on that briefly, but it's mainly because, once you master something and once you look at something every single day, at the same time, so the New York session, in the London session, in the Asian session, and you're watching it for hours every single day, each week, each month, you understand the characteristics of each, instrument and pair very, very well. And you then realize what works and what doesn't work. You know, for some FX pairs, certain strategies really don't work. But for others, it works brilliantly and it will get you really nice, clean trades. So I think, you know, I'm going to do another video breaking that down because that was another commonly asked question. But I would say in terms of indices or Forex, what you want to decide to choose, I would say, you know, personally for me, I now prefer indices. You know, and I only trade indices. I don't really trade FX anymore because I love the volatility. But if you're starting out, you're new, FX I think is the way to go. You know, you'll be able to master it, build up more confidence with it. It will build you up a really good foundation for, you know, all of the basics in terms of trading. And then once you've mastered that, you've been trading that for 6, 7, 8 months, you know, if not longer, more, you know, then you can look to, you know, open your eyes to other commodities, indices, other pairs. And yeah, you can, you know, you try and get more accurate entries on FX pairs and then move across to indices. So the reason I kind of prefer indices now over FX is because I actually like the volatility. I also like the fact that it, you know, is quite irrational. It swipes liquidity. You know, it's very, very wicky because it means I can get great risk to reward ratio trades, get in and out of the market a lot faster, make the money move on. And it also means I don't have to spend as much time, you know, looking at the screens every single day, which is important, you know, to get out and do other things in your day rather than just watch the charts all day. Whereas, you know, I was having a habit of FX pairs moving a lot slower, that for anything, you know, considerable to happen, you need to come back every single 30 minutes to see what's moved and what's changed. You know, if the trade is working in your favor or not. Whereas indices, I can be on the phone 15 minutes in and out and got, you know, quite a decent sized move. So yeah, I've now gone through all of the notepad. Hopefully that's answered a load of questions. It's helped, you know, broaden your knowledge on indices and Forex and, you know, helped you answer the question of, you know, what you should think about choosing to trade. And yeah, you know, my concluding argument would be start off with Forex, master it, learn all the basics, learn all the foundations to trading through Forex, and then move across and, you know, try out some indices and see if you prefer it or not. But otherwise, as always, hope you've enjoyed the video. If you have, feel free to subscribe, click like, comment down below your thoughts and your opinions as well. Be interesting to hear any of your opinions as well on this topic of discussion. And yeah, as always, if you want to join the community, all of the links are down below. Telegram, Discord, Instagram, you know, Facebook, all of the rest. And yeah, look forward to speaking to you soon, seeing you in the next video, and hopefully inside the community as well. All right, brilliant. Bye for now.